good, team? Today I want to show you a strategy that really helped me to move on from my beginner investing and trading strategies and significantly level up my game, my profitability, my decision making. The best part about this strategy that I'm about to show you is that it's really the easiest way to analyze the price trend and to understand which direction the market is moving next, as well as this strategy can be used on every single type of financial asset. Doesn't matter that you're trading stocks, crypto, gold, currencies, you will be able to take advantage of this strategy. Now, this can be as simple as what you see right now on the screen, which is one single red line, which is a long-term moving average showing you the direction of the price. Whenever the price is riding below this line, it's signifying that the price is in a downtrend and is likely to make lower lows. Whenever the price goes above and is riding above the long-term moving average, the price entered in an uptrend. This means that the price is more likely to make higher highs from now on because it has entered in a bullish trend. This can be as simple as that. Now, in this video, I will go into detail and the basics of how this strategy works, as well as show you exactly how to set this up using TradingView, the main charting tool that I am personally using. So without further ado, let's dive in. First things first, let's look into the three types of price trends that you will generally see in charts. Assets can be in an uptrend, in a downtrend, or trading sideways, or other ways to say that is that the price is simply consolidating. The important thing to remember here is that once a price trend has been established, it is more likely to continue than to break that specific trend. And this is where the moving averages come in, because moving averages work by calculating the average price of a financial asset over a specific period of time. Most of the institutions and the old school traders are using the simple moving average or the SMA for this. Now, an example for this would be using the 50-day SMA, which essentially just equals with the average price of the last 50 days. Also, traders are using and institutions are using the 200-day SMA, which will be the average price of the last 200 days. Now, unlike the SMA, I recommend using the exponential moving averages, and I can tell you and explain you very simply why. The exponential moving average is not calculated the same way as a simple moving average. The simple moving average is just the average price of the last 50 or 200 days. The exponential moving average, the more recent days to the current date are weighted heavier. This just means that it responds much quicker to changes in the price trend and overall makes it more flexible to react to different market environments, right? Bearish trend, bullish trend, different catalysts can happen. The exponential moving average will essentially allow you and enable you to front run the market. Why? Because it's giving you signals already with the EMAs that the price has entered a bearish trend, a bullish trend much faster, while the 200-day SMA, while the 50-day SMA guys are still waiting for their average price to go down there. Your signals will be already in, and this means that you're able to front run the market with your short and your long entries. Super powerful. Now, the combination of EMAs I personally use are the 8 EMA, the 34 EMA, and the 144 EMA. To explain you shortly how these are used, the 8 EMA are specifically for fast-moving trades. When you see the price riding above the 8 EMA or riding below the 8 EMA, let's say on a daily chart, this would signal to you that the price is in a very strong uptrend or a very strong bearish trend. Now, when the price is riding both above the 8 EMA and the 34 EMA, that's a trend confirmation also on a medium term as well as in a short-term time frame that the price is likely to continue in that direction. And 144 EMA is specifically confirming longer time frame trends, right? It's using the kind of the average price, the weighted average price of the last 144 days. So when you want to see longer term trends, you're looking at the 144 EMA. Now, let me show you just how powerful this strategy is with some real life buy and sell examples, and I will look into crypto, stocks, currencies. This is gonna be amazing. So let's look at the first sell signal. Let's look at the first sell signal here. How I knew that the crypto bear market was here and why I went into cash when Bitcoin was around $50,000. Now, let's pull up this chart. What do we see here? We see the red line being the 144 EMA, the long-term trend line. Let's look at the 34 EMA, which is the medium-term trend confirmation. And of course, we have the 8 EMA, which is on the shorter time frame trend. The 8-day, the 34-day, the 144 days. Now, the start of a long-term bearish trend gets confirmed when the 34 EMA crosses below the 144 EMA. Just think about it. The last 34 day is mathematics. The weighted average price of the last 34 days is significantly decreasing rapidly, right? And that's what this index is showing, that the new trend, the shorter term trend, is quickly decreasing in price, and the 44 EMA is going to slowly start reacting as well. But because it's a much longer term time frame, because it's using much more data, it's going to take a longer time for this to come down. The shorter time frame crossing below the 144 EMA is the ultimate signal for you that the price is entering into a bearish price downtrend. 34 EMA crossing below the 144 EMA right here. This happened when Bitcoin was at 50K. This is a long-term bearish trend confirmation. Now, we can also look at how the 8 EMA reacted in this scenario, because the 8 EMA already reacted to the bearish price action at 60K. When Bitcoin was at 60K, the EMA was saying, the shorter time EMA was saying, we are entering into a bearish trend, which was on the shorter time frame. We came down here, we retested it at the 50K level, but essentially the 34 EMA went below the 144 EMA. And in this case, this was the ultimate signal based on the moving average strategy that we are entering into a longer time frame price downtrend, a bearish signal on Bitcoin. And this is a chart from 2021 December. Bitcoin went down essentially all the way to 16K, which became very, very true. Now let's go on to the second example, which is the more recent, just from January 2023, which is a buy signal on Bitcoin at about $16,940. Now, what you see here is the start of a short-term bullish trend. By the way, if it gets too complicated, feel free to stop the video, go back, rewind, watch it again, because this is so powerful. I really want to help you to understand this. So what you see on this chart is the start of a short-term bullish trend that is very often described as a cross between the 8-day exponential moving average and the 34-day exponential moving average. This is what you see right here on the bottom of the chart, the bullish signal at the price uptrend, and this happened at about $17,000. Bitcoin went up all the way to 25K on this breakout. Now, what we see here is, of course, a bullish trend, a very strong bullish trend, because the price is riding above the 8-day moving average. Then you also see that it is in a trend confirmation because the price is riding above the 34-day moving average. Oftentimes what you will see in this case is that the price pulls back to the 34 EMA, retests it, and then continues with the breakout. As long as the candles are above the 34 EMA, retesting is completely normal, but as long as the price is riding above this, the price is in an uptrend. There's no reason to panic on the pullbacks. The other indicator that we have here is actually the 34 EMA crossed above the 144 EMA, which in this case, again, signifies that we are entering into a longer term bullish price trend here, where likely what you will see is that the 34 EMA and the 144 EMA will be acting as support levels, and the price will continue to ride above the 144 EMA and likely most of the time also above the 34 EMA. As long as the price is riding above these EMAs, you can expect bullish price action. You know the direction of the market is going upwards. Now let's look at another example from the stock market, and I'm specifically looking at Nvidia. And this was a place where a lot of people were shorting, but the EMAs were actually signaling the beginning of a strong bullish trend. So let's look at this one. What we see here on the Nvidia chart is that it went all the way back down to about $115. It broke out all the way to $240 just in the time frame of about 5 weeks. Okay, the signals were clear from the EMAs. The 8 EMA was signaling the breakout at $130, which means a $100 increase was projected by the EMA strategy right here. 8 EMA, the shorter time frame, going above the 34 EMA. The cross is an indication of the beginning of the bullish trend. Next, we are looking at the longer time frame EMAs that were also signaling right here again on this pullback the continuation of this breakout at $150. The price uptrend was officially confirmed. 8 EMA crossing above 34 EMA, and then later on even the 34 EMA crossed above the 144 EMA. This is the ultimate bullish signal. I know a lot of people were shorting into Nvidia throughout this trade, but again, if we follow the EMAs, it's just pure mathematics on the average prices, and it's the clearest indication of the actual price trend. The fourth example here, let me ask you this. Do you see the bearish trend here? What are the signals that you are looking for right here? First of all, the 8 EMA is crossing below the 34 EMA right here. This is the Euro USD chart. The 8 EMA is crossing below the 34 EMA. Then the 34 EMA crosses below the 104 EMA, confirming the longer term bearish price trend. This is a bearish signal. Shorted. What happened next? Next, the USD actually took over Euro in valuation, and it was like 95 cents on a dollar, which was pretty crazy. My friends were telling me that from now on, it's gonna be called soccer and not football. That hurt me. Eventually, the Euro ended up recovering, also signaled by the EMAs, but this could have been a really good short trade, taken clear signal coming from the EMAs on the bearish price downtrend and the beginning of that. So just to summarize the signals that you're looking at, if you have a notebook, just copy paste this to keep this on your cheat sheet, okay? So 8 EMA crossing above 34 EMA, bullish trend. Prices riding above 34 EMA, bullish trend. Prices riding above 144 EMA, bullish trend. 34 EMA crossing above 144 EMA is the confirmation of a longer term bullish trend. On the bearish side, short side, 8 EMA crossing below the 34 EMA, shorted. Price is riding below 34 EMA, shorted. Price is riding below the 144 EMA is also a bearish trend. 34 EMA crossing below the 144 EMA is a confirmation of a long-term bearish price trend, a downtrend in the price action. Price is more likely to make lower lows from now on. Now, a quick disclaimer here. While no indicator is 100% accurate, this EMA strategy has served me extremely well. I usually use it on the daily time frame, sometimes on the 4-hour even. And this is not financial advice. I'm simply just educating on how I am using moving averages to my advantage, and I think with way more success than how most people are using them right now. So let me show you finally to set this up and how you can do this in a very, very simple way on your chart. So first things first, you will go over to, let me just pick a chart that is easier to see. Let's take this chart as an example. Let's just go over here to the phantom chart and show you how you can set this up. So what you see here is I already have these 3 indicators and I use them separately because what I personally like to do is I just like to see sometimes only 1 or 2 of these indicators to make the chart less busy. If that's your intention, then you can have all 3 indicators separately, but I'm also going to show you a way how you can simplify this and just have one EMA indicator up here that is showing you the exact same EMA positions. Okay, so option number 1, if you want to set this up separately, You type exponential moving average or moving average exponential, and it's going to give you a line that is looking like this, and it's looking slightly blue. What you can do is you go to settings, you go to inputs, and you can change the length. The length in this case is essentially be asking you how many days should it be calculating. For how many days should it be calculating the weighted average price. So in this case, let's put it at 144 days. And if you want to use the same color combination that I am personally using, then you can go over to style, and under the EMA, you can actually pick the colors. So 144, I use the red color, let's say this one. And I also changed the thickness on the line just to make it a little bit improved on the visibility side, so I can easier spot the color combination and the differences in between. So that's pretty much it, and you have the 144 EMA set up. Now, if you want to set up the 34 EMA and the 8 EMA, essentially you just need to keep on repeating this process where you put in the moving average exponential, and then you will just change to 34, you change the color, you put 8 EMA, you change the color, and then boom, you have the 3 EMA set up on your TradingView chart. Now, if you don't want to mess with this too much, and like sometimes don't want to have just only 1 or 2 of these indicators on, then you can go and type in 3 EMA. And this guy, Victor Grego, shout out to him, created this indicator that essentially combines these 3 EMAs in one single indicator. Now, what you need to do is, of course, similar to what I showed you before, is to essentially adjust the length on the EMAs to move it to the shorter time frames, which means EMA 1 is going to be 8 days, EMA 2 is going to be 34 days, and EMA 3 is going to be 144 days. And of course, if you want to use the same colors that I am using personally, then you will go and choose the white color for the 8 day, you will choose the green color for the 34 day, and you choose the red color for the 144 day moving averages, and you click OK. We can even double check this, that this fully aligns with my other EMA calculations, perfectly aligns as you can see on the color combination, and voila, this is how you set up the 34 EMA, the 8 EMA, and the 144 EMA moving average strategy. I hope this was helpful. In case you have any questions, I highly encourage you to let me know in the comments below. And also, if you like this kind of content, you want me to make more of this, also just let me know in the comments and give me a thumbs up. Ciao.